Hi and welcome back to Trading Strategy Testing channel where we backtest your strategies and share with you the best tips to help you improve your journey as a trader. In today's video, I'll be sharing with you a few tips to help you trade MACD divergences like professional traders. Before starting, if this is your first time here, make sure to subscribe to the channel and hit on the bell icon so you won't miss any video in the future. We have already backtested the MACD indicator on this channel 100 times and made various live market orders using it. In this video, we will share with you 3 tips to optimize the usage of this indicator and reduce false signals. Many traders prefer to use MACD indicator together with other indicators. They usually use the 200 exponential moving average, the ADX, or even the RSI stochastics. In this example, I'll be using the 200 exponential moving average. You can see it's represented by this red line. So according to the strategy, we only go long when MACD gives us a buy signal and the price is above the 200 EMA. On the other hand, we can only consider short trades when MACD gives us a short signal and the price is below the 200 EMA. Alright, let's look at some examples from the chart. We can see here that MACD is giving us a buy signal and the price is slightly above the 200 EMA. So if we go long here, it will be a successful trade. The best thing about this strategy is that it prevents us from taking the false signals. We can see here, for example, that MACD is giving us a sell signal. However, the price is above the 200 EMA. So if we go short here, it will be against the trend and we will definitely lose a couple of pips. The second tip to avoid false signals is to enter the market using pending orders. So instead of entering the market as soon as we see a MACD entry signal, we will actually place a pending order which will only be triggered if the price continues moving in our desired direction. In this case, we will use buy or sell stop orders, and this way we can avoid many false breakout and signals. Alright, let's look at this example. We can see here that MACD is giving us a buy signal and the price is above the 200 EMA. This is a great entry, especially if we consider this significant uptrend. You could actually enter the market immediately, but I would actually place a pending order a few pips above the current price. So the order will only trigger if the price continues on the uptrend. If the price reverses, my balance is safe. Alright, I'll use the replay mode on TradingView to simulate the market. And the order will be placed few pips above the current price. We can use the 200 EMA as a barrier to protect our stop loss. The 200 EMA is considered as a major key level that price often struggles to break it unless the momentum is relatively strong. Alright, we will opt for 1.3 risk to reward ratio. Let's see what happens next. That's a winning trade. The third way to improve the success rate of your trades is by using the market sentiment chart. We have set up a live stream where we share the latest market signals for free on our channel. You can check it out at any point of time as it's running 24/7. I will leave the link to this live stream video in the video description. The same live charts are also available on our official website, which is tstlive.com. The market sentiment refers to the overall attitude of investors towards a particular security or financial market. It is the mood and level of confidence in the financial market as revealed through the securities activity and price movement in the financial market. When it comes to the Forex market, most of the public data is not centrally generated, and it's based on the feed provided by major brokers. So when you're trading Forex using these signals, you are actually trading with the vast majority of traders. This practice will help you increase the chances of being on the right side of the market. The first element to consider is the Forex heat map that shows you the latest price updates with the strongest and weakest currencies. It is also a dynamic way to gain a general idea about the market performance and the best Forex pairs to trade in that day. High volatility currency pairs often move more pips during a particular period of time than low volatility ones do. You may face more slippage when trading high volatility currency pairs, so you should use a Forex broker that offers zero slippage accounts. You can find a link to our recommended Forex broker in the description box. High volatility pairs are definitely the most profitable as they tend to make exponential big moves every day. Therefore, you should reduce your position size when trading them to remain longer in the market. The high volatility pairs are highlighted in dark green or red color. The low volatility ones are in light colors, and we should avoid trading them unless we are using a trading strategy that works in sideways market. The technical summary on the right side gives you the current price direction of the major Forex pairs. The indicator is set on a 5 minutes time frame. You can check out the overall price direction on higher time frames. Avoid entering the market when the status is neutral, and the best pairs to trade are those experiencing a strong bullish or bearish momentum. Other than that, we have also included a news ticker with the major news that might have a strong impact on the Forex market. Make sure you are never trading against the trend and market indicators. I personally use these indicators every day, and I wanted to share them with you guys to help you increase the profitability of your trades. Let us know in the comment section if you want us to make a detailed video to explain all the indicators on this chart. Before we end our video today, I would like to inform you that you can submit the trading strategy that you want us to backtest using our new official website. You can visit us now at www.tstlive.com to learn more about trading and download all the materials we share on our channel. To submit your trading strategy, you can click on the dedicated menu section and fill up the form where you describe the strategy you want us to backtest. Thank you for your attention, and let us know in the comment section what topic you want us to cover next. Happy trading!